Interest rates. Everybody is so interested in the interest rate, especially the news headlines. So let me just start by saying, please talk to a professional. Do not get your information from news headlines.
Ruth, it's all lies.
So before we dive in to talk a little bit about, how can I get the lowest interest rate?
Yes.
I'm just going to do the soapbox spiel about how interest rates are not really that high right now. Like if you look back historically, decade over decade, 6% was typically a very low a low interest rate historically.
Yes.
Um,
With the average being close to 7.
the average is 7. Yeah, I mean, people who bought homes in the 80s, they had 18% mortgages. And people still, we have short memories, and people still remember these interest rates in the 3s and 4s, and they keep saying, well, I'm going to wait until the interest rates go back down. Guess what? That is not happening.
It hasn't happened yet. No.
I can't see it happening again. I think it was a historical anomaly.
Well, 3 and 4 is off the table.
Yeah.
But do we get to the high 5s again?
Maybe.
Maybe. Yeah.
Maybe. But, the point is, I think, like, if you're not already in real estate, get in as soon as you can.
Yes.
But you don't time the market. You buy
the market.
Yes, you buy when you can, and then, then if you want to watch interest rates and refi when they come down, that's a great strategy. So we're going to talk about some strategies for getting the lowest interest rate.
Yes. And there are strategies for that, for sure.
Yeah. So
yes.
let's hear a couple.
The very first one right out of the gate is know your score. You should know what your credit score is, right? And a lot of people will tell me what their Capital One says that their credit score is.
Credit Karma.
Or Credit Karma.
Yeah.
It's true. Most of the credit cards do give you the score, though. So there are different models for determining a credit score. And everybody should know that because they always think that that's the score. The consumer score is going to inflate it. It's always going to be higher than the mortgage score. But there's a little trick, myfico.com.
Oh.
Actually is where you can see your mortgage score.
Okay, so you can actually see the score that the lender is going to pull.
Yep.
Okay.
Yes. So, it's knowing what your score is because it will dictate your terms. It will end up dictating what loan programs are available to you, what your interest rate is, what your mortgage insurance rate is. So you definitely want to make sure that you're doing everything that you can to optimize that. Now, I wouldn't say sit on the sidelines while it takes you 2 years to work on your credit if you can get in. I would say be knowledgeable, talk to a lender, figure out what it's going to take to get it up, and see if that's something that you can do before buying a home.
Well, and there's some breaks, too, to watch. So if you go to this myfico.com and you see that you're at a 695, it might be worth it to try to see if you can bump it up to 7 because can you tell what the breaks are?
I can.
I'm 580.
It's every 20.
Oh, okay.
So it starts at 760. That's top tier. 760 and above. It used to be 740. So now 760. So 760 and above is top tier. And it goes up to 850. That's the top. So 760 and above. So then it's every 20. 740, 720, 700, 680, 660, 640. And then conventional stops at 620. And you can go to a 580 for FHA.
Gotcha. What else? Rate buy downs. That's another way to get your interest rate down.
So right now, we're seeing a lot of sellers who are willing to negotiate. But I would say in any market, you have opportunities to negotiate. Even if it's a seller's market, it doesn't mean that you shouldn't be able to put together an offer and a package that makes sense where both people win. So going in with the idea of how do I optimize my financing while still creating a fair offer to the seller that they're willing to take, right? Or negotiate. So in looking at rate buy downs, you have two major options. You have the temporary and you have the permanent. So a temporary rate buy down is just going to pay for a rate reduction for 1 year, 2 years, or 3 years. And really the cost of that is simply the difference between the monthly payment at whatever the current rate is and the monthly payment at 1% lower or 2% lower or 3% lower. It's just a simple add up 12 months of difference, and that's that's the cost.
Yeah, they're doing it like escrows, like they do with property insurance and
Yes.
taxes,
Yes.
where they're just collecting that money up front and paying the difference.
The lender holds it,
Yeah.
and they subsidize the mortgage payment every single month. That's all that's happening. So the permanent rate buy down, what we're actually finding is we're doing more of those. If we can negotiate the seller to give us enough of a seller credit, I'd rather do a permanent rate buy down. We have several right now where we've bought down the interest rate to say 5.75. And as we talked about, we don't know if interest rates are going to go lower than that. So why wouldn't you do a permanent rate buy down and lock it in on a 30-year fix of 5.75?
Yeah. And so how much is that, like, ballparkish
Yes.
to buy that down? Like 10 grand? Is that ballparkish?
So there's kind of a theme that 1% of your loan amount will buy your rate down 0.25%. So if the rate today is 6.5, it'll only drop down to 6.25 with a full percentage point. But that's not always true because it really depends on the secondary market. So people will say, well, that's a general rule. And it's a general rule, but I'm going to look at what's the secondary market giving me and how far down can I jump down with some money.
You know, this actually makes me think this might be a good time to say, you know, people want to figure all this stuff out on their own.
Yes.
You know, maybe before they talk to a lender, maybe even before they talk to a realtor, they try to figure out a lot of this stuff on their own. And then when they're doing their own numbers, they're like, I'm not ready yet. I'm not ready yet.
Yes.
And I would say, you know, if anyone who is thinking about buying, that's the time to start consulting the professionals. That's the time to talk to a realtor and a lender, because why would you not go get professional expert advice on something that's going to help you that's free? You know, I mean, we're not out here charging people for all this good advice.
Right. I tell that
They just don't know.
Yeah.
I mean, there's so many loan guidelines and so many rules and so many different options.
It is absolutely free to talk to a lender. No lender's going to charge you to sit down with them. And so people do disqualify themselves without knowing the full range of options.
They do.
I was talking to one beautiful woman who was wanting to buy, and she called me up. She was a start and stop 3 times. I'm going to do it. Oh, no, I'm going to wait. Interest rates are too high.
Yeah.
I'm going to do it. No, I don't think I can. And finally, she's just like, I don't think I can do it. And I was like, well, you're not doing it because of financial reasons, because you have absolutely no idea where you are. Because you're guessing.
You won't fill out the application and upload your documents.
But it's overwhelmed. So at what point does it become easier? And I think sitting down one-on-one, doing this with a lender, so I can go look at how we can make it easy, and then tell me no.
Yeah.
And then tell me no. But yes.
Yes. I feel like I say this all the time. Fill out the application, upload your docs.
Yes.
And then the lender has the full financial picture and we can see what the options are. And maybe you're not at a point to buy right now.
Exactly.
And that's okay, because we're going to use that information to then create a plan of next steps and figure out, you know, what is the timeline for when you're going to be ready, and let's work to get there.
Agree.
Not just shooting in the dark, kind of, I'll buy when I'm ready. Maybe it's next year, but not really having a plan in place.
Things don't happen unless they're planned.
Yeah.
I find most times. Yes.
What else? I know we've been having a lot of sellers contributing to rate buy downs or closing costs with seller concessions.
Yes.
We've seen that a lot in the market. So that's another way to get your interest rate down, is by having the seller actually pay to buy your rate down. And who would have thought that was? Who would have even thought that was an option? I think it's really cool. There's about the latest data from March, I believe we still have 60% of homes going under contract with seller concessions.
I saw that.
So across the 7-county Denver metro area, 60% of sellers are contributing in some way to buyer closing costs or rate buy downs.
A lot of it's going to rate buy downs. A lot of it's going to rate buy downs.
So there was one other thing that we talked about as far as an interest rate hack, and you were saying that a bigger down payment could actually affect your interest rate. Tell me more
Yes.
about that.
So there's there's actually a matrix that determines what your interest rate is. It determines what factors are going to adjust your interest rate. Fannie Mae, Freddie Mac, FHA, they all have kind of a matrix that affects your interest rate. And so your amount down impacts your interest rate. People don't realize that. So a lot of times, if you put a lot less down, you can slightly get a higher interest rate because lenders love mortgage insurance. They're the only ones. Nobody else loves mortgage insurance. Or if you put more down, if you put 25% down, you can get a lower interest rate. Or if you put 40% down, you can get a lower interest rate. So it can help depending on what you're trying to achieve with a lower monthly payment. We're going to lay out, all of those options when you sit down to look at your finances and go, what do you have that's available to you for the purchase of this home in assets? And then what is your monthly payment goal? And then what is the purchase price that fits the lifestyle that you're trying to live? And if I can match those up, to your point, maybe the rate doesn't matter as much. Right? And especially if we have seller concessions that we can buy it down.
I do think people get hung up on the interest rate a lot more than is necessary. I think it's not, and I think it's because of media headlines, honestly. I think that's why people are so hung up on it. It's just such a tiny factor in the overall scheme of things because, as you know, real estate is a long-term deal.
Agreed.
Yeah.
Agreed.
Well, thank you so much for being with us today, talking about interest rate hacks, how to get the best interest rate on your mortgage. Yeah, thank you.
Pleasure. Absolutely.
If you like this content and want to support the channel, don't forget to hit the like, subscribe, and alert bells before you go.